Hey everyone, welcome back to Corporate Decoder. Today AVAH just filed an 8K reporting a big stock sale by its owners, and I'm seeing a crucial detail about why they are selling. Quick note, this is not financial advice, just my take on public filings for educational purposes. Basically, big shareholders are cashing out and the company itself is not getting any of that money, which tells us a lot about where management sees things going. So what we have here is a report called an 8K, which companies file when something really important happens that the public needs to know about right away. This one comes from Aveanna Healthcare Holdings Incorporated. The date of this report is the 24th of August 2026, and it is talking about an event that happened just a few days before, on the 20th of August. This is about Aveanna Healthcare Holdings Incorporated, a company that provides healthcare services. You might know their stock symbol is AVAH. The main thing here is about their common stock, which is what people buy and sell on the stock market. On the 20th of August 2026, Aveanna Healthcare Holdings Incorporated, which we'll call the company, made a deal with an underwriter. Think of an underwriter as a middleman who helps sell a lot of stock at once. This deal was for what they're calling a secondary offering. Here is the key part some major owners called selling stockholders offered to sell a massive amount of shares, 15 million shares, at a price of $11.75 per share. These sellers also gave the underwriter an option to buy even more shares, about 2.25 million more if they wanted to. This is pretty common to make sure they can meet demand. This whole sale officially wrapped up on the 24th of August 2026. Now this is where it gets interesting. The company itself, Aveanna Healthcare Holdings, did not sell any of its own stock in this deal. And crucially, it did not get any money from this sale. This means all the money from selling those 15 million shares went directly to the people who were selling them, the major shareholders. When big shareholders sell off a large chunk of their stake, especially when the company itself isn't raising any money, it often signals that those insiders believe the stock might not go much higher, or they might have other reasons to cash out. It is like they're saying, this is a good price to get out for now. Looking at the research context, we see that the market cap is around $3 billion and the stock price has been in the $5.93 to $13.98 range over the past year. The fact that these insiders are selling at $11.75 per share means they are indeed selling at a price that is towards the higher end of its recent trading range. This specific agreement, the underwriting agreement, details all the terms of this sale. It is a big deal because it shows a significant shift in ownership. The main story here is that a huge block of shares, 15 million plus an option for another 2.25 million, were sold by existing major shareholders, companies like Bain Capital Investors, LLC, and J.H. Whitney Equity Partners VI. LLC are listed as top institutional holders, and it is likely they were part of this selling group. Think about it like this: if you owned a significant piece of a company and saw a good opportunity to sell a large portion of your investment at a favorable price, you might do it, especially if you've held it for a while or want to diversify your holdings. However, when it is a big chunk like this, and the company itself isn't benefiting from the sale, it can be a signal that those closest to the company see limited immediate upside, or have concerns about future performance. This offering essentially allowed those large stakeholders to convert a significant portion of their private investment into cash. The fact that Aveanna Healthcare Holdings did not raise any capital means they are not using this event to fund new projects or pay down debt. This is a shareholder-driven event, not a company-driven financing event. The price of $11.75 per share is a key figure. It is important to see where this sits relative to the company's overall financial health and market perception. With a market cap of $3 billion and a P/E ratio of 10.5, this offering price suggests that the market still values the company. But the insider's actions can sometimes temper that valuation in the short term. When we see major shareholders selling, it is always worth considering the context of their holding period. If they've held for a long time and are simply realizing gains, that is one thing. If they are selling shortly after acquiring a stake or during a period of significant company challenges, it raises more questions. The research context mentions J.H. Whitney Equity Partners, VLLC, trimming their stake, which aligns with this filing. This type of secondary offering is common in the market, but its implications depend heavily on the company's situation. For Aveanna Healthcare, a company in the healthcare sector, such a large sale by key investors could be interpreted in a few ways. It might indicate they believe the stock has reached a fair valuation and want to reduce their exposure, or it could signal a lack of confidence in the company's near-term growth prospects. Let's consider what this means for the remaining shareholders. The sale itself does not directly dilute the value of existing shares because the company isn't issuing new stock. However, the perception that major holders are exiting can put downward pressure on the stock price. It is a psychological factor as much as a financial one. Historically, when large insider or major shareholder sales occur, especially in amounts this significant, it can precede periods of slower stock performance. For example, when companies conduct secondary offerings where insiders cash out, it is not uncommon to see a cooling off period for the stock, especially if the company's operational performance doesn't immediately validate the move. The filing is signed by Matthew Buchalter, who is the Chief Financial Officer. This indicates that the company is aware of and acknowledges the details of this significant transaction. In conclusion, this 8K filing from Aveanna Healthcare Holdings Incorporated details a substantial sale of shares by major existing shareholders. The key takeaway is that the company itself is not raising any money from this sale, meaning all the proceeds go to the sellers. This action, especially at a price of $11.75 per S-share, is a significant event for investors to monitor. While it doesn't necessarily mean the company is in trouble, it is a strong signal from those who know the company best that they are looking to realize gains or reduce their exposure. The risk I am watching is how the market reacts to this large insider sale and whether it triggers further selling pressure. What I am actually looking for is any follow-up commentary from the company or these selling shareholders that might shed more light on their motivations. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description.